Hi, everyone. Welcome back to Talking Success. Before we get into this week's podcast with Rahul Jain from Peach Payments, who's the founder and CEO, who's going to be talking about their latest fundraise and their expansion plans across the continent, I just wanted to introduce our sponsor, LexisNexis Risk Solutions. They're a pioneer of the world of advanced analytics and data-driven decision-making. Whilst they're headquartered in Atlanta, Georgia, they work globally. They've got a big presence here in Africa and in South Africa. They're key players in transforming how businesses manage risk and uncover hidden opportunities. They have a very big focus on banking, financial services, including fintech, insurance, and healthcare, and even the government sectors. So they offer a suite of solutions that empower businesses to fight fraud, streamline workflows, and improve investigations. So if you're looking for some assistance on the compliance side, give our friends at LexisNexis Risk Solutions a call. And here's this week's podcast. Thank you. Hey everyone, welcome back to Talking Success. Over the last couple of months or so, we've had lots of VCs and investors coming on board and telling us about, what they look for in investments or what they look for in fintech businesses for them to invest in. And I think a lot of it has been quite hypothetical. So we're talking about, this business that could do this or could do that or could do something else and may need to look like this or may need to look like that. So I thought we'd give this a little bit of a different spin today. And I'm joined by none other than Rahul Jain from Peach Payments. If anyone's been watching the news recently, Peach Payments have just secured a huge round of funding from Apis Partners in London, who are very well known for investing in probably the fastest growing fintechs across the continent. And I'm here with Rahul today to talk about A, his journey, and B, to kind of unmask, and if he will be happy to divulge a little bit about what made Peach Payments special, why they were able to raise such a huge funding round in what is a very difficult market at the moment across the continent or across the world, and what sets Peach apart. So, Rahul, welcome. Lovely to have you on board. I usually kind of start with an icebreaker, and I did a bit of research, and I understand you're into paddle. Now, I'm not, but I might give you a game at one point just to sort of come in and show you I'm willing. But how's your paddle going, and how's your hiking up mountains, I believe, as well?
Good. I think, paddle is, I started playing about a year and a half or so ago. And I grew up playing a lot of racket sports, tennis and squash. And so it came naturally. And I think it's such an equalizing sport, right? It's one of those, it's a social game. You usually play doubles. So,
Yeah.
it's four of you. And I think with the way the game is structured and the way the court is built, I think it's really an equalizing game. Some of the best players are probably 20 years older than I am, right? And
Wow.
and what I've found is you can play with different age groups. You can play with mixed doubles or even two women against two men, and it's not a one-sided affair, right? You could actually lose that match, even if you were the two men out of, the matchup. So I think that's some of the things I
Yeah.
really liked about paddle. And as paddle picked up in South Africa, it became the new golf. Like, I mean, we were meeting everybody there, right?
Yeah.
All the fintech founders or the banks, like all our partners, all our customers, everyone was playing paddle. So it suddenly became a really cool networking and social environment. And I think, um, yeah, I think that's why it's one of the fastest growing sports across the world. So I'm not here to sell paddle, but since you
No,
asked.
no. You've done a good job, though. You've even maybe convinced me, probably more for the networking side than the fitness and winning any events. But no, I know that there's quite a few of the VC guys that play paddle as well. I know
Yeah,
Zach George
yeah,
and the like. So
yeah. So
maybe
Zach, Johan, we all played
yeah,
together, right?
yeah,
Exactly.
maybe I'll hang up my golf clubs and join you guys one day for a game of paddle. Anyway, we're not here to talk about paddle. We're here to talk about another P, which is Peach Payments. First of all, congratulations. I know I've
Thank you.
obviously been following the story over the last few months. I know there's been a hell of a lot of work that's gone into this. This isn't just a case of sending an email
Yeah.
to a private equity firm saying, "Hey, can you send some money our way?" It's a lot more complex than that, especially where we find ourselves in the current climate, especially
Yeah.
raising in on the continent as well, and given the challenges we're facing in South Africa with grey listing and what have you. Ro, I'd
Yeah.
love to know the story. Before we get to the big kind of sort of big ticket, let's go back a step. I know you're originally from Delhi, right? How long have you been
Yeah.
in South Africa, and how did that come about?
So I've been in South Africa about 11 years now. So I moved here in 2012 when we started Peach. Prior to that, I was in Boston. I worked for a strategy consulting firm in the Boston office. Did my MBA before that in Barcelona and in Boston at MIT. So kind of been, jumping cities for the past few years. But yeah, it's been 11 years in Cape Town, and it's been a journey. It's been an interesting ride. We were a fintech before fintech was a word. And I think,
Yeah.
yeah, but I think, Africa still continues to be one of the most exciting places to build a business. It's, if you look at, the growth trajectories of some of the other markets like India or Brazil, you can almost see that we are a few years behind. And, this is the time to invest on the continent if you want to build generational businesses. So I think for us, that conviction, I know it sounds like a long time, but 11 years on, it's still day one for us, right? Because that's the conviction we have about the opportunity on the continent.
Well, listen, I think being an 11-year-old startup is not unheard of these days, right? So I posed a question a few weeks ago saying, when's a startup actually no longer a startup? And yeah, I'm not sure I got a
Yeah.
conclusive answer. So,
And it's one of
Rahul,
those things these days. Yeah.
yeah, absolutely. In terms of Peach, then, your background wasn't
Yeah.
necessarily sort of financial services, was sort of MIT consulting. How did the world of payments come across you, and what got you interested in that in the first place?
So I did a summer internship during business school in Pretoria, with a boutique VC fund, and I worked on three of their portfolio companies. But that's how I met Andreas. He was advising the fund at that point in time. Andreas was my co-founder at Peach. So we stayed in touch. He had just moved to South Africa a couple of years ago before that from Germany. And then, I think it was late 2011, he called me and said, "Hey, do you want to do payments in Africa?" And, I was kind of hitting the 2-year mark in consulting and itching to get something going of my own. So kind of working on a different startup idea with a friend from MIT and a roommate of mine in Boston. And then I said, yeah, you know what? Why not payments in Africa? So I didn't know the P of payments, or actually had never been to Cape Town before. Had met
Wow.
Andreas for 3 days in 2009. And I said, yeah, let's do this. I quit my job, took a flight, came to Cape Town, and the rest is history.
Amazing. So you started domestically in South Africa, and then I know you operate in numerous markets now. But what was that roadmap? What did that look like?
Yeah, honestly, that's also been a journey and a learning lesson. So in year one, we wanted to be in all of the emerging markets, and we said, hey, we're going to build a payments business for emerging markets because we kind of knew that opportunity that existed. I think maybe starting in Africa was the wrong thing to do, because the venture capital ecosystem didn't exist at that point in Africa. So as an African startup, it was, if in that time, and in 2012, 2013, 2014, if you raised $100,000, you were the most funded startup of the year, right? Now you can raise $100 million and you're still not the most funded startup of the year, right? So I think that's how vastly different the scenario was back then.
Yeah.
So had we started this concept in India or in Brazil, I think we could have actually grown it in those first few years into a broader emerging markets player. But that was the lesson we learned in the first year, was focus, right? So we spent a year on this, trying everything. We were pitching to Google, we were pitching to global tech businesses for payments, but we quickly realized that to build a business that now needs to be sustainable, that needs to fund itself, because there isn't that much VC funding available. Like our first funding round was 50,000 euros, right?
Right. Sure.
So, we started to focus a lot more, and we picked, we said, hey, we're based in Cape Town, so let's focus on South Africa. We started to sell, grow the business in South Africa. Um, I think we never did any marketing till 2019, almost
Wow.
2018, 2019, because we never had anybody for marketing in Peach. Like, we just used to pick up the phone and sell. Like, people would be calling us to sign up,
Yep.
right? So we were fortunate, in a way that competition wasn't as hectic as it is today.
Mm.
We had a bit more leeway to make mistakes, to learn from them, but we were the new innovator, right? Over all these years. And, from a two-man team back then to 150 people in 3 countries across 4 offices, into a multi-million dollar business. I think, yes, it's taken us time, but the trade-off was, time versus access to capital, an easier competitive environment, etc. So one of the reasons why we also now raised this round was to accelerate this growth, to double down on some of the things we do well, to invest in some of the areas we don't do so well, and to start to really scale this business into a broader Pan-African, and from there on, a more emerging markets player that we always envisioned it to be.
Well, it's a remarkable sort of outcome from where you are now to where you were with two people without having tens of millions of dollars of investment. So I think kudos to you and Andreas
Yeah,
for sticking with it for so long. I think there'd be lots of sort of entrepreneurs that probably would have thrown in the towel or made an early flip and sold it to another sort of
100%.
PSP. What's kept you going, Rahul? What stopped you from doing that?
I think, me personally, when I started on the entrepreneurial journey, I grew up in a business family in India, right? My family made watches. We've been, like, on both sides of my family, it's been, entrepreneurship and business, right? So I grew up with this idea that, do anything takes time, and it's very hard to build a business. Yeah. So for me, I came in with the mindset that, it's going to take 5 years to build a meaningful business or to even get anywhere. So I gave myself 5 years from day one. Right. So you're right. I firmly believe, we say that the stat is what 95% of all startups fail. But
Yep.
my opinion is majority of those fail because people give up too soon. I mean, there's obviously bad ideas and, market conditions change, etc. But generally, I feel founders give up too early. And maybe that's, what kept us going. I've also said it over the years, that in Africa, especially in Africa, with all the challenges and the dynamism in the market, what we need, frankly, is not unicorns. And someone quoted me the other day at somewhere, was that I said, we need to be cockroaches, right? You need to survive, like, literally through nuclear wars and if you just survive, you will be relevant and you will be meaningful on the continent. So I think we kept that mindset and we kept
Yep.
persevering from that. I don't think we're successful yet, right? Funding is not the end goal. It's a means to the end. It's, now the hard work starts for us. So we've raised all this capital. Actually, there's more pressure on us now than it was before. We actually had a pretty easy existence where we ran this business how we wished, right? And we
Yeah.
pretty well, to be honest. But now you have external investors, you have a board, you have, different expectations. Um, so for us, the opportunity was always there. We knew it was not going to be an overnight play, and we were quite determined to build a sustainable business, right? So even now, I mean, I don't think I agree with overall, like, different investors and different startups have different strategies. Our thing is not growth at all costs, right? Our thing is to continue to build a sustainable business, because what I think will happen is, and we've seen it, and it is happening on the continent right now, you're going to have high growth VC funded startups that are on the hamster wheel that are going to fall off. Whereas what we're trying to say is, how do we just stay on that wheel and stay on longer, and then we'll win. right? So we are very focused on building a sustainable business. We are very focused on growing the business in the right way.
Mm.
We, it is hard. It is hard to keep that discipline when everything around you, because it's hard because your team members expect different things. The world expects different things. And suddenly we're not the sexiest startup on the scene. We're not you know, I mean, my competitors have raised anywhere from 50 to 300, 400, $500 million. I mean,
Yep.
Flutterwave's at sitting at 500. Some of the other South African players have raised between 50 and $250 million.
Yep.
Before this round, we had raised $3 million in our lifetime, right? So for us, it's a completely different thought process, I guess. We also believe in the opportunity, and we are now accelerating that growth and investment. So don't get me wrong, we're not against, or we're not. I'm not advocating for slow growth. I'm just
Yep.
saying be prudent
Sensible.
about.
Yeah, no,
Yeah,
absolutely.
be sensible.
You're quite right.
Exactly.
We've seen over certainly the last 12, 18 months, a number of, extremely well-funded fintechs and tech companies that have just gone nowhere, right? And you can't, I don't
Yeah,
think you can buy a market. I don't think you can, you can buy merchants, certainly in this part of the world. There's a lot of brand loyalty. There's a lot of expectation. You need to build trust. And I think, you do have, these big fintechs that come in with, US funding or US backers or US investors, whoever it may be, coming in thinking or believing that they could buy the market. And I think it's been proven time and time again that's not a strategy necessarily that works. If you're a Google, you're a Microsoft, that's a different story. But I think if you're dealing with
yeah,
people's money and you're moving money from consumer to merchant, merchant to bank, there needs to be that trust that's built up. We'll come
yeah,
back to trust in a minute. In terms of innovation, again, you touched on it briefly. How do you keep innovating in what is, a dynamic market? Absolutely. And we've got, merchants that want different payment methods. We've got consumers that sort of habits are changing now from being a very cash economy to now, being comfortable with
yeah.
tap on device or tap on glass or QR codes or whatever other methods there are. How do you stay ahead of innovation without compromising, sort of losing focus on core business? How do you balance that?
It's been extremely hard. Honestly, that's the thing. Everyone, I think all founders are trying to get right at any point in
Yeah.
time. So I don't think we've solved that, right? I think one of the thoughts we had, previously we didn't have an option, so we had to. And I drew the analogy. I said, we've got all these plates in the air, and what we were doing until previously was like catching the one that's closest to the ground and about to
Yeah.
break, right? And like focusing
Yeah.
on that,
Yeah.
right? I think with capital, what happens is you can start to be more proactive. You can do more things in parallel. Um, I had a conversation with another founder. He's one of our investors. He runs a, $2 billion payments business out of the US. And he was like, Rahul, you're raising all this money. And it's not like you might feel that you don't have constraints, but you got to create your own constraints. You can't run a business without constraints. So for discipline, you will have to create those constraints and say, hey, how are we going to operate within these guidelines or within these boundaries? So I think, yes, we can do a lot more in parallel. That's why we raised money. We're going to hire people. We're going to invest in key areas. I think what we have, hopefully for us, is we've got an excellent team. We've got people who we think understand the business deeply, who understand the payment space deeply. And then at the end of the day, we also take some bets, right? So we say, hey, certain things we might pass on, and it comes back to bite us later. But sometimes we're right, because it went nowhere. So I think you're always choosing, and I think every single day you're making decisions about the path your business is going to follow. And we try and make that as in an as informed way as possible. So, what we've done well at Peach is we understand payments deeply. We know the markets. We've operated in these markets for 11 years. We we engage a lot with stakeholders outside. We are talking to our merchants. We're talking to, regulators. We're talking to um, participants in the ecosystem, and we're constantly trying to evaluate, hey, where should we be headed? Where does
Yeah.
this world, where's the world going to be, and how are we going to be there before the world ends up there? So it's hard. It's sometimes we get it wrong and we have to quickly abandon it and change, course correct. But I think that's what every single founder out there is doing, honestly. So I don't know if we're doing anything different, really.
Yeah, you have to be able to pivot. That's for sure, right? And be
Yeah.
amenable to change and different marketing conditions. In our world, regulations change at a heartbeat,
Yeah.
right? So you need to be
I
agile.
mean, yeah, and we've seen this in Nigeria, the currency is down 50%, or, in Egypt, the same issue. So, frankly, like Egypt was one of the markets we were looking at going earlier, but we're kind of putting it on hold for the time being. We're like, ooh, we don't know, we're not sure, we don't know where the currency is headed. Had we invested a year ago, we would be down 40%, 50% at this point in time. And that's what's happened to a
Well,
lot of startups, unfortunately.
Well, let me ask you, without obviously, divulging anything that is confidential. Actually, I'm going to phrase this slightly differently. When you look at growth outside of South Africa and you look at geographical areas, you mentioned Africa, which I think is kind of your home, and then sort of LATAM or India or other markets. When you look at countries in Africa, what are you looking at in order to assess whether it's
Hmm.
viable for Peach Payments to come in and make a difference to the market or take market share? What are the sort of metrics or sort of KPIs you look at?
I think, see, we're in a space where people need to be purchasing products and services through digital channels, right? Like, so we operate
Yeah.
in the digital environment. So,
Mhm.
we kind of go back to the basics. Obviously, size of the country, population. I mean, that's a very good proxy of the market size, right? So Nigeria with 200 plus million people versus South Africa with 60 million plus people, you can see the difference in where VC money is going, right? Or
Yeah.
where startups are investing. I think so. That's one. So, population, internet penetration, right? What percentage of the population is actually online, feature phone versus smartphone penetration. We start to look at that. We look at leading indicators like, hey, is travel online? Are people purchasing travel already through digital channels? If not, I mean, that's typically the first industry that goes online. So yes, we could work with travel and take it online, but I think, then we make a proper business case around it and say, okay, where do we have likelihood of success? Competitive environment and landscape plays a big role. If we were to think of Nigeria, it's like, okay, you've got Flutterwave there, you've got Paystack there, you've got MoneyPoint, you've
Okay. Yeah.
got
Yeah. Absolutely.
um, yeah, list is endless, right?
Yeah.
Versus, I don't know, Egypt, but again, not no dearth of competitors there, right? So I think all of these factors play into that decision, and sometimes it's also merchant led. We just went into a new country where a merchant of ours says, "Hey, can you do this for us in this country?" And we're like, "Okay, that makes sense. It's a big merchant.
Yeah.
Let's do it." And that's one way to accelerate a new market entry, right? So most of the time, historically, actually, we've entered new countries merchant led, right? When we went to Mauritius, it was mostly South African businesses who have holdcos there saying, "Hey, can you process for us over there?" And that's how we entered Mauritius, right? And Kenya was similar. We had South African businesses saying, "Hey, by the way, we are expanding to Kenya. Are you guys available there?" And this happens every single day. So we are very merchant led. We're very led by what our merchants are telling us.
And then we talk sort of digital products, but there's also the e-com side as well. When it comes to sort of last
Yeah.
mile and actually having the infrastructure in place to facilitate e-commerce transactions, not talking digital, I'm talking physical products, that must be a factor to take into consideration as well, because I know obviously all your business is kind of online business, and e-commerce growth certainly since COVID has just spiraled. But is that a metric you look at, whether there's potential for the logistical infrastructure to facilitate that?
I think that's, to be honest, we haven't really thought of that too deeply. We look at logistics, and I think, if I think about e-commerce, there are three
Yeah.
distinct pillars. It's like presence, like how do I go online as a merchant, payments, and, delivery or logistics, right?
Yeah.
So how do I go online? How do I have an online presence and an online storefront? From there, how do I get paid for the product or service I sell? And then how do I actually deliver this product or service to the user? By the time we started to look at markets, they have a decent system, So when it was
Sure.
Kenya, and now with Uber and Bolt and some of these players getting into deliveries, I think there's enough happening. There's a lot of investments going into logistics. You've got Fargo in South Africa expanding everywhere. You've got, there's a startup called ShipRaiser out of South Africa and Kenya that's basically building a logistics aggregator, right? So,
Okay.
and saying, hey, we don't need to build the last mile logistics, but we can aggregate and make it easily accessible to
Yeah.
the businesses. So it's on the lines of what ShipRocket did in India, right?
Okay. I know there's
So
called the Mr. Courier or the Courier Man or something, that it's kind of an online
the
portal,
Korea
and you
guy.
just the Courier. That's the one. I used it last week to send something to George. But okay. So there's all of those. Now let's go back to where we started. Not in Delhi with your grandmother's watch business. Maybe a little bit beyond that. So we're talking about APIS. How did that come about? What was that? What did that process look like from your perspective?
So I think we've known the APIS team for a number of years, right? Nick Small and the guys, and they were big investors behind DPO. So obviously a direct competitor to us back in the day. Then Network acquired DPO. So we've known the APIS team. I think we've had a number of conversations. When we started to raise, we spoke to a number of investors. We spoke to a lot of the US VCs. We had interest from European VCs. Obviously, Apis and us were also chatting. I think for us, in the end, when we went with Apis, I think we went with a player that has deep expertise again in fintech. So we again went for expertise over, like you said, or someone else said the other day, tourist investors, or some of the other funds. US San Francisco investors that have no presence in Africa, don't understand these markets. So we wanted someone who understood local context, understood the markets, and could add and bring that expertise to the table for us, right? And Apis, being a fintech focused investor, has assets in India, in Southeast Asia, in the US, in Africa. So we still get the benefit of a global network, right? We still get access to learnings from across the portfolio, from across different geographies, while having someone that's done it before who can help us avoid some of the pitfalls that they've already been through. So, for us, some of that intangible value that they bring to the table was quite interesting. And that's kind of why we went with them. From a process perspective,
they're also very nice people as well, right, Rahul? Let's be honest. Nick
exactly,
and the team,
exactly,
they're really nice people to do business with. Yeah, absolutely. Go on. Sorry, in terms of process, yeah,
absolutely, and they're they're super well known and reputed, tier one investors. So for us, that also made a big difference, right? We wanted a big name VC, we wanted a big name investor to lend that credibility to us as well. So I think that box was also checked. From a process perspective, it's the typical stuff. You sign a term sheet, you go through DD. We just had this additional hurdle of, because Apis was so deeply invested in so many payments businesses in Africa, we had to go through a bit of regulatory approvals from a competition perspective. So that was just an additional step. Interesting learning experience, but we got over that hurdle, and we made it to the other side.
And then this is a cheeky question, I know, and feel free just to say I refuse to answer this, or I retain my rights not to, or play the Fifth
My
Amendment. But
Fifth Amendment rights.
yeah,
Exactly.
exactly. From API's perspective, is it a sort of a cookie cutter approach? So, hey, this worked really well with DPO. We got them to exit at $280 million. This is the process we formed. Rahul, Peach Payments. There you go. Follow that. We'll stick in for 4 years, and then we'll go and sell. And
Yeah.
this is very easy money. Or I'm probably downplaying this a little bit, right? It's not that
Well,
easy to do.
see, at the end of the day, everyone's in it to make money, right? I mean, the nature of a financial investor is to generate returns for the LPs in the fund.
Absolutely. Yeah.
So I think what a I don't think it's a cookie cutter approach because the fundamentals of the two businesses are very different, right? And I think because this is exactly the same question we had for them. Hey, like, hey, what do you have in mind? And I think that their answer was exactly this. It's like, it's very different businesses. What we're not interested in, we are interested in great returns, but what we see is good fundamentals. We see a platform that we can help grow into something more meaningful, and in the process, everyone makes a good return. For us at Peach, what was very interesting again was they've done it before. They have a very good success in track record from an exit perspective, and that's super attractive to us. What's the point of building $1 billion or a $3 billion or a $5 billion business, which is all paper value, right? I want to realize that value on one day, and Apis has proven that as a track record. So, they are extremely successful at exiting businesses, if you think about it. So for us, that was super interesting. And actually, that was a big plus in their favor, versus being
Yeah.
portfolio company number 50 in a, global fund where if you don't deliver on the growth objectives, they stop lose interest and they don't care about you anymore. Versus being a pivotal part of your portfolio and saying, you know what, we care about every single one because we will deliver success on each and every single one of our portfolio companies. So I think for us, that made a lot of sense. And again, aligned with
Amazing.
our ethos and our values.
Fantastic. I have to ask you because there's going to be a lot of people listening to this going, "Wow, this just sounds like an incredible
I hope
journey."
I'm not pissing people off, but this is the
You won't be pissing anyone
honest
off.
truth.
No, not at all. Honestly, Raul, I think people like yourself, like Iran, who was at DPO, like Kun at Time Bank, you guys have gone out there. You've put your heart and you've worn your heart on your sleeves. You've been in the trenches, as you quite rightly said. It was you and Andreas picking up the phone, making cold calls to people, saying, "Come and use our platform." To where you are today. So I think everyone's got. Well, I certainly can speak for myself and people I know in the industry. A huge amount of respect for you and your team. But let me ask you. In terms of giving some advice to other fintech entrepreneurs that may not be at the stage where you're at the moment, but maybe on the journey, whether they're sort of picking up the phone, making cold calls, asking people to use their platforms, or maybe they're at sort of seed, Series A. What bit
hmm
of advice would you give to people? You've mentioned the sort of perseverance, which I think is a key attribute. Don't give up. What else would you advise people operating on the continent specifically?
I think, for any business, like you got to solve a real problem. And I think this is something we've looked at Peach and we repeat it all the time, right? We'll see, we get approached for, hey, can you go talk to this business? And, my first conversation with a merchant is, okay, what are you struggling with? What can I help solve for you? Sometimes we have merchants where they are with a competitor and, I feel like all I'm doing is forcing ourselves in. So I actually tell the merchant, and I'm like, you know what, I don't think, like, I'm not here to force speech into your stack. So unless I'm really bringing value to you, I don't think you should switch to us because,
Mhm.
we need to be solving something because otherwise we're talking about price. And, I think price competition just destroys markets instead of actually generating value. So, I mean, there are competitors out there that are going to destroy the market and value, and it's okay. But I think for us, it's always been about solving a problem for the merchant. And I think that's what I would advise entrepreneurs to focus on. Because once you're solving a real problem, you don't have to sell. Then people will come to you to
Yeah.
get their problems solved. And I think that's what we found, right? Why didn't we have marketing until 2018, 2019? Was because we didn't need to. People came to us and said, hey, how do I sign up? Right? Um, Beyond that, we said, okay, now we've reached a certain stage and now we need to grow this business further. Yes, we need to be a bit more outbound. We need to be a bit more aggressive. But I think that fundamental ethos of trying to solve a merchant's problem doesn't go away for us. Like, that's what we're thinking about every single day at Beach.
So I'm going to ask a
So
question
yeah,
that's
that
probably
would be
on.
my advice.
Okay, I'm going to ask a question on that that I would imagine a lot of entrepreneurs probably struggle with. I've been there. Is okay. That's great. So I want to solve a problem for a customer, and I'm going to say, look, if I can't solve a problem, then we're not the right partner for you. But I imagine there's entrepreneurs out there, especially in the current climate, that are going, yeah, well, that's great, but I still need to pay overheads. I've got salaries to pay, and I need to keep the business ticking over. I need to make sure it's sustainable. At what point do they say, actually, I need to push a little bit harder because I need to make sure that there's revenue coming in, whether that's to sustain the business or to pay off loans or whatever it may be, versus taking I'm not going to say the moral high ground because morally it's correct, ethically it's correct as well. And you say, actually, Mr. Client or Mrs. Client, I don't think we can help you. I think you probably need to take your business
No,
somewhere
don't
else.
get me. Yeah, I think don't get me wrong, Darren. I think we also push, right? We also try and replace our competitors. But I think I'm trying to give you the general principle that we try and
Sure.
follow, right? Um,
Mm.
if we're just competing on price or just like for like with a competitor, then we're not going to be relevant for very long because someone else is going to do it cheaper, faster, better at that
Yeah.
point, right? So the challenge I think that businesses and founders have today is how do you differentiate? How do you be relevant? How do you be useful? And I think that only comes from actually solving a problem for your customer,
Yeah.
whatever that customer is. Uber solves the problem of convenience. Why is Chuck 6060 growing so well? Is because it's super convenient. Like I don't need to go to a Checkers anymore, and stuff is delivered to me fairly quickly within 60 minutes. It's a phenomenal experience. But the problem that they're solving is of convenience. It's of time-strapped, you know, individuals that are saying, "Hey, I can save this time by getting this stuff delivered to me and win buy that time back." And that's why people are using it. So at the end of the day, if you think about any service that you're using, any product you're using, it's solving some sort of a problem for you.
Mm-hmm. Certainly is. Um, I usually ask my guests to bring out a crystal ball at this point, Roll, and go right the future of X. And I'm definitely going to do that with you as well. Okay, so I don't think you got off lightly.
Okay.
Let's wind the clock forward 5 years. I think any more than that is probably a little bit ambitious. I was on I recorded a podcast with Brett King the other day, and he was talking about what bank's going to look like in 2050. I'm going, yes, that's way too far for me to comprehend. So let's
I can't help you with that one.
no. I struggled as well. But let's wind the clock forward a few years in the world of sort of payments in
Yeah.
Africa. Do you see there being quite a lot of consolidation within the market in terms of the players that are operating? Do you see there being a dominant sort of market leader? Obviously, you want that to be Peach, but do you think that will emerge? Or do you think there's still going to be quite sliced and diced, and merchants are going to have sort of multiple points of integrations for failovers or for different routing or what have you? What's your view?
Yeah. I think, for that, I draw a parallel from what I see in the US, in Western Europe, in the UK, even in well-developed, saturated markets. So my view for Africa is in 4 to 5 years' time, there's definitely going to be consolidation. I think there'll be 5 or 6 large players on the continent. Some might be regional. I don't think anyone's going to be Pan-African. It's quite hard to be in 54 regulated jurisdictions in parallel. I think there'll be 5 or 6 large players, and there'll still always be local income competition. There'll be smaller regional players. It's still going to be quite a fragmented space. The big thing about Africa is that it's not a zero-sum game, right? The pie is growing 30-40% a year and will continue to do so for the next decade. So I think there's enough room for everybody on the continent. And but it won't be very, very fragmented. There will 100% be consolidation, and I think it's already happening, right? There are already businesses either running out of runway or starting to say that, hey, we can't do this alone, and it's actually better off, as part of something bigger, or why don't we all join hands and become bigger and be more relevant? So I think that continues. I think the demographic dividend on the continent is super interesting. 60% of the population is below 25. You're going to see a lot more cross-border trade, a lot of cross-border interest, from the other continents into Africa, out of Africa. And I think not just 5 or 6 large players, but you will start to see a lot more of the global players playing. You obviously already have players like dLocal and eBanks and some of these coming, but Checkout is going to start looking. I mean, PayPal's made a few investments. None of these, WorldPay, like these guys aren't even scratching the surface on the continent.
No, they haven't.
So I think there's lots still to happen. And
Well,
it goes
I think
back
there
to
is
my point. Like, if you just survive
yeah.
it.
Well, listen, I think you guys are well on your way to survival, right? I think you're being a bit hard on yourself. I think you guys have done exceptionally well. And I'd just like to thank you and your team as well I appreciate how busy you are. So thank you for finding time to chat with us and chat with our
No,
audience.
absolutely.